Hey everyone, and welcome to this shipper update. I'm Zach Strickland here with the one and only Anthony Smith to talk about some non-defense capital goods excluding aircraft orders.
That's right, non-defense capital goods new orders excluding aircraft year over year.
Ooh.
In addition to flatbed outbound tender rejection index. And so what we have here, we're talking about in the previous segment previous shipper segment, that there was a somewhat of a peak and a little bit of a lull here in the non-defense, in this blue line here that we have. And I was saying if I was a betting man, I would hedge that this was going to continue to go down because we had our green line, our flatbed outbound tender rejection index, moving downwards as well. And lo and behold, we see a downward movement in both of these areas. And so that's not to say that there is a drop off in manufacturing or that capacity is about to, loosen up, in a huge way here.
Trucks everywhere.
Trucks everywhere, nothing like that. It's just saying it's not as tight and it's still positive, just not as positive. So we're talking about just, I think a few weeks ago, how manufacturing may have hit a peak, but it's still going to modulate around this high rate. And so really on a month-to-month basis, non-defense capital goods new orders increased. And so this will be the 13th out of 14th month, I believe, of increase for non-defense capital goods new orders, showing that business-to-business activity is still very much strong and that there is still a lot of momentum here.
So could some of this easing in momentum, we just saw Grace talking about some of the semiconductor stuff and shortage in commodities. Is some of this easing due to the fact that people can't get some of these commodities or these parts? They're just not available right now?
That's going to be a big part of it, is those shortages. They're going to play a variable. The other thing that's going to be a variable, of course, employment. There's going to be quite a few variables that's going to constrict the amount being able to be produced. So this is just new orders. There's still unfilled orders that are piling up, backlog of orders that are still expanding. So that still all has to go into production, and all that stuff has to, of course, eventually get shipped out. And so because there's a shortage, because there's a lack of labor right now, that's all going to start to really kind of strain the momentum that this stuff is going to really kind of get pushed out at. And that means that there's still going to be a lot of stuff continue to be made, manufactured, and ordered over in the next upcoming months and quarter, I think really throughout the rest of 2021.
Yeah, so I mean, I think that's a fair statement. We're talking about things where, you can only produce so much, so therefore people stop ordering things. We've talked about it in, trucking, for instance, with the orders of the semiconductor shortage. There's 6,500 trucks, sitting there that Kevin just said, without, the parts to complete the order. So people have stopped ordering them. So it's kind of like this undulating effect. We have all these orders, got to wait for all the parts and components to come into place, and then we can, get back. So that to me signals that this is going to still have a pretty long tail going through the rest of the year, right?
Exactly. And I'm glad you mentioned that, because another thing that might have a long tail throughout the end of the year is going to be housing, which is going to be in our next chart here. We have to talk about what happened with new single-family home sales. And what we saw in a on a month-to-month basis was a drop-off of 6.6% for new home sales. And so I was talking about last week how there's something strange going on in housing when we saw the most recent uptick for housing starts, and talking about what technically is a housing start.
Right.
And so that's when a foundation ground is being broken and there's a foundation there. Actually, that doesn't have to be any kind of lumber or building materials on site, but there can just be a bunch of concrete slabs around the country, and that's a housing start. And so what we're also seeing is that completions are delayed and there's a lag going on. So there's going to be a little bit more of a lag. Even though we've seen lumber prices come down, we were chatting with Dustin Jalbert from Fast Markets Reci last week on Freightonomics. Tune in. And we were mentioning what are some of those pricing pressures really indicate. And some of those downward movements in the lumber price aren't going to hit builders just yet. And so what we're seeing is not only was there a drop off in these median sales, but there was also an increase of 6.1% for medium prices. So we're really kind of seeing that resistant point for how consumers really feel about these increased prices. And of course, fewer homes being sold means fewer downstream purchases for those homes.
Yeah, so again, some limitations there in terms of inventory as well. Keeping this, this cycle probably on an extended pattern of downs and ups throughout the rest of the year, right?
Exactly.
Well, thank you so much for that, Anthony.